Hello, and thank you for tuning into the Collective Shift channel. Matt here to share with you the biggest news from the macroeconomic space and the crypto industry over the past week. Starting as always with the Australian economy, and it would be remiss of me not to kick things off with the news that Melbourne, and the broader state of Victoria, is exiting lockdown in about 48 hours or so. So yeah, the city, at least Melbourne, being the most locked down city in the world due to just the effects of the pandemic. So very exciting stuff, if not from just a well-being and social standpoint, uh, through the lens purely of macroeconomics, it's going to, very in the short term, you would expect to see increases in retail spending, consumer confidence, business confidence. So very exciting times and people getting back to work, doing what they love best, whether it's the arts industry or the restaurant and retail. So very exciting times, and to also see New South Wales, Australia's most populous state, also continuing to ease lockdowns. Very promising indeed, and hopefully those vaccinations can keep going up and those restrictions can continue to be lifted. Onto the ASX, the Australian Stock Exchange, the past week was in the positive. There were gains over the past week. We started off this week, Monday and Tuesday, both consecutive days in the green. Um, and yeah, leading those has essentially just been outperformers in earnings in the earnings season that we've just kicked off for the third quarter. So anything else from Australian? I guess also from just a broader, softer tailwind is also that easing of lockdown, as I just mentioned earlier as well. But onto the US stock market, which is kind of, as always, the Australian stock market tends to mimic, at least in a direction. They put in their fourth consecutive day of gains, and it has really been a strong start to the earnings season, as I touched on last week, that was coming up. The first ones that have kind of kicked things off have been the banks, if I'm not mistaken, had a very strong results in the first week, including some of the largest banks that are listed in the US. So they've pushed the major averages to within striking distance of their all-time highs. So the Dow Jones nearly 1% off its record high, and the other two, the S&P and Nasdaq, in between 1 and 2.5% off their records, respectively. So that's very, very promising. Probably the one piece of news that did, I guess, withdraw and take back a bit of those gains was the disappointing news out of China, their GDP, or gross domestic product. That essentially GDP essentially being the main way that economies are measured all around the world. So their quarterly economic growth was not as promising as what the forecast or consensus forecast was. So in the third quarter, it was 4.9% of economic growth, and that's coming off 7.9% in the second quarter. So 3.0 percentage points below is quite significant when you're talking about an entire economy, particularly one as developed and as big as China's. So that miss and that weaker than expected economic growth did kind of contribute to a bit of the stock market essentially not going up by as much as it probably would have otherwise. And similar, sticking with China here, we've got the just energy crisis that I've kind of been touching on in recent weeks, has just continued to persist and really drive the headlines in the past week. I suppose if there's one thing I want you to get across from listening to this week's update, at least from the macroeconomic side of things, it's that, yeah, energy is very much still driving the headlines. And what does that have to do with you? Why should you care about it? It's because it's really contributing to this inflationary pressure that we've already been seeing as a result of just supply shortages and things like that. So when you've got costs of electricity, cost of energy, and other commodities climbing by so much, it just adds to that inflationary pressure. And why is that inflationary pressure significant? Well, that obviously ties into all things such as monetary policy all around the world. and whether or not central bankers, if they are concerned about these price rises, then it'll be really interesting to see whether they kind of respond by increasing interest rates maybe sooner than expected, which the stock market, from an investor's point of view, definitely wouldn't like that. Um, but yeah, expect to see this energy kind of narrative continue to dominate, especially leading into, I think, Glasgow. There's a big energy or climate kind of meeting in a fortnight or so, which has kind of come at a very interesting time at a stage when the supply of commodities and other energy sources are kind of very just dominating the headlines relative to other stages during the year. So yeah, we've seen, as I've covered in previous weeks, we've got some more, I suppose, price records, or at least highest prices in a while. For I think in previous weeks I've covered aluminium was at 13 year highs or something like that. Zinc this week has been the next one. They've hit 15-year highs, and copper is back above $10,000 per ton. So yeah, just the cost of everything going up, kind of due to a confluence of factors, really. It's kind of increased demand coming out of the lockdown. You're also seeing some natural disasters in countries such as the US. You've got regulatory policy in China who are wanting to kind of swing more towards renewables and get rid of coal. Um, but at the same time, they're kind of having to rely on the coal industry to kind of keep their energy market going. And then in Europe, you're also seeing a lot of issues with just availability of energy supply, such as I think there it's more to do with gas. So there's definitely so many factors at play here, and I'm sure I will continue to update you honestly, it's looking like every week for the rest of this year that there is going to be, I suppose, energy related headlines in the news. And really, why is it important? Again, just that relationship with inflation and I guess the affordability to live, and whether or not these inflationary pressures will really be translated into increased costs for the everyday person, average Joe or plain Jane kind of everyday citizen. Will their cost of living get higher and really more pressure on what it is already kind of being at the moment in a situation where just the affordability in developed nations is really stretched so much already? It'll be interesting to see whether this energy crunch kind of just continues to put pressure on all that sort of narrative as well. So in terms of what I'm not looking forward to per se, but what I will be kind of expecting to see in the coming days, at least from a macroeconomic standpoint, is just, yeah, more of that energy in the headlines. And then really driving markets will be just the result of the continued earnings reports coming out in the US and other economies and stock markets around the world. Okay, moving on to the crypto space, and the biggest news, of course, for anyone who's been keeping up to date, was news that the first Bitcoin ETF or exchange traded fund will start trading on the New York Stock Exchange in the US on Tuesday, I believe, Eastern time. So that'll be overnight, just after this recording in Australian time. So yeah, what a watershed moment for the industry. I think the SEC kind of came out, or the Securities Exchange Commission, so the securities regulator in the US. I think they came out on Friday and essentially said they weren't going to get in the way of the ETF listing. So I think a common misunderstanding is the SEC doesn't really have to like approve an ETF application. They more just have to just not get in the way and just like outlaw it. So they've said that they will stand aside essentially, which is basically implied that they're going to be letting this ETF go through. Why is that significant? Well, it's just because it ends about 6 years or so of Bitcoin ETF applications in the US, which have repeatedly not been approved. So it's basically more just like a growing up period for the Bitcoin asset class and broadly the crypto asset class. More, if anything, it's more just a validation and really just cements the asset class more just in the global, public psyche, really, of investors. Technically, you've been able to get exposure to these kind of instruments in Europe and Canada, Brazil, for quite some time now, like about at least 12 months. But for the fact it's been available now in the US starting in about 12 hours or so is just monumental because so many other nations then kind of will look to the US as a leader in, I guess, their approach from a market standpoint towards how to treat Bitcoin. So that's basically the real significant significance of this development at the moment. A few concerns I have, I think many others in the industry have kind of had this concern, is just the fact that it's an ETF based off of Bitcoin futures. So as opposed to Bitcoin like spot Bitcoin, so I guess Bitcoin that isn't a derivative. So I guess what I'm saying is these ETFs are backed by derivatives of Bitcoin rather than quote unquote physical Bitcoin, which is really just actual Bitcoin coming out of the 21 million supply. So what these investors will be getting when they do buy these Bitcoin ETFs, I'm not sure how many will be aware of the fact that, hey, they're not actually buying Bitcoin. They're just buying an instrument that is the price of which is responding and tracking the price of Bitcoin. So that's a very key key note there. And you've also then, because it's a futures ETF, you've also got extra costs such as the futures contracts having to constantly roll over every month. So, November 2021, December 2021, January 22, Feb 22, March 22, there's like separate futures contracts for every single month. And the costs of the ETF issuer to roll over those contracts and make sure they're all, I guess, compliant and such. That's just an extra cost that you don't get with just a spot, like an ETF that's just backed by spot Bitcoin. And so, yeah, you get fees that are tied into that ETF, and then you've also got issues such as like contagion and backwardation, which essentially just means that the futures price could really just get a bit wacky based off of like the actual price of Bitcoin. So you could definitely have instances where these investors into these Bitcoin ETFs really you could have a situation really where, like, in the time where they've owned that Bitcoin ETF, the price of actual Bitcoin has increased, but them as investors in that Bitcoin ETF have actually either basically like made no money and lost their money, or they've actually lost money. So there's some concerns I have with this kind of Bitcoin futures ETF, and many others in the industry have. So it's a bit of a kind of took the, I guess, it's kind of made this milestone not as positive as what it otherwise would if it was just a normal ETF going live that was backed by, physical BTF or spot Bitcoin, physical Bitcoin or spot Bitcoin. But nonetheless, it's a positive development overall. I think it lets more people get exposure to Bitcoin, more or less, even though it's not the actual thing. And why is it appealing? And why is this more appealing than just buying Bitcoin off Coinbase or, FTX US? It's mainly because just of the way that, well, they're not called superannuation funds in the US, but more just 401ks, and the way that these kind of savings accounts and such can get exposure to Bitcoin. This is the most like tax compliant and cost efficient way for them to do so. So it kind of like opens up the gate to all those kind of accounts to get access to Bitcoin, which is the huge kind of promising news of this development. And then also, yeah, just general, it's a bit more of a tax compliant or tax friendly way, is basically what it represents. Just finally, why is the SEC more Why is the SEC more willing to let this through and like not get in the way of an ETF based on Bitcoin futures? It's because, according to them, basically the investors in these Bitcoin ETFs have more protections because it's actually being regulated by a piece of legislation that you couldn't kind of file an ETF under if you were creating an ETF that was backed by spot Bitcoin. So I know that's a common question that many people have wondered. So I just want to address that as well. So moving on. So yeah, huge news overall, huge news. Some issues with it, but it's a step in the right direction, put it that way. Some really promising adoption news last week. So Stripe, yeah, big payments company in the US, has begun assembling a crypto engineering team to chart its future in crypto. So Stripe was one of the kind of first companies to, I think, accept or support Bitcoin, and they eventually withdrew that support about 4 years after so they actually did that in 2014. They announced support for Bitcoin and the first in the industry from a payments company. But then they withdrew that support in 2018. So yeah, promising to see them come, full circle and now start to actually launch a crypto team. So just another one of these, I guess, non-crypto companies and established tech companies that are now building out a crypto unit. We've seen, yeah, quite a few this year really, like whether it's even like TikTok or like obviously Square has been a bit longer, but yeah, many tech companies, as I've been covering basically every week all of this year, it seems to see there's some huge news out last week. It was more just the confirmation of a trend. So we saw earlier this year that China, or a few months ago really, that China officially banned Bitcoin mining activity from going on in its country. So all that was significant because Chinese miners or mining machines based in China were accounting for about two-thirds, three-quarters of Bitcoin's hash rate. So about two-thirds, three-quarters of, I guess, the whole Bitcoin network was being, I guess, the security was being provided by Chinese-based computers or ASICs. So, and that is now zero. So to see that's now zero, obviously after that the ban imposed by the Chinese government. So now the question's been like, okay, how's that composition of the miners really changed? And Cambridge Centre for Alternative Finance, which has done some really great research and data on the distribution of miners all around the world for a few years now. They came out and determined that the US is actually in the lead in terms of the location of Bitcoin miners. So 35% of global hash rate um, is accounted for in the US. And then second and third were Kazakhstan and Russia, respectively. And yeah, Kazakhstan had 18%, Russia had 11%. So yeah, just kind of like surreal to see that. I'm pretty sure the Bitcoin hash rate is more or less where it was prior to China's removal of miners, which is pretty insane when you think about it. You've had all these miners basically pick up and leave, and then the rest of the world has kind of taken that opportunity to now contribute to the Bitcoin network. And all of a sudden, the whole composition of the Bitcoin network that had been the case for several years of China having the lion's share of Bitcoin miners and the contributing the most hash rate. To see that just sweeping transition has been quite something, and to see the US in the lead is again just kind of a huge I guess narrative and shift to take note of, and we are more likely to see that US or North Americans, like including Canada as well, that kind of them solidifying themselves as a leader in, I guess, contributing to Bitcoin's network through mining activity. So you've also got Square here, so the payments company in the US. CEO is Jack Dorsey. He also just, yeah, speaking of Bitcoin mining, he said that Square will soon begin investigating technical requirements for building an open source Bitcoin mining system. He also said that yeah, Square is also considering basing this system on custom silicon, um, which is kind of really notable because silicon is one of those kind of, areas as well where it's kind of centralized to just like a couple or a few companies, I guess the supply of it and the manufacturing of it. So um, I guess the more distributed that can get, it's also just a win for all parties really. Um, so yeah, definitely watch this space. A lot going on with Square and Twitter, I guess, in relation to crypto and Bitcoin, as I've covered in previous weeks. Speaking of just getting involved and exposure to crypto, we saw Queensland Investment Corporation. I think it was reported by the Australian Financial, oh no, not Australian Financial Review, it was the Financial Times, is reportedly open to including cryptocurrencies as part of its investment strategy at some point in the future. So QIC, this entity, is Australia's fifth biggest superannuation pension fund. So to see them just at least, if not like investing or getting exposure to crypto immediately, the fact that they're open to including it is definitely just extremely positive progress from even 12 months ago. So just another promising story there. And more adoption news, got Interactive Brokers launching crypto trading for US financial advisors. So we saw, I think I covered last month in one of the videos that they had opened, their brokerage app or Interactive Brokers to US, like their users in the US, that they could gain exposure to crypto. And that was just like the, fourth, fifth, or sixth major brokerage app to do so. But yeah, Interactive Brokers here going a step further and actually, approving cryptocurrency trading for registered financial advisors as well. So, so yeah, very promising news there. Okay, it's getting on to NFTs. I wanted to just give a shout out to Drop Bears here, um, who got covered, I saw today in the ABC, raising money for koalas. So through NFTs, essentially. Oh, well, it is through NFTs. I'm pretty sure it's through the fees that they get through commissions for, I guess, any sale of these drop bear NFTs. So yeah, I'll definitely drop this story in the show notes below. But if I'm remembering correctly, yeah, so 70,000 Australian dollars has been donated so far, with which this like drop bears NFT is like only, it must be like a week. It's which sold in less than 18 hours. Oh yes, yeah, or late August. It came out, so already $70,000 in about, I don't know, seven or so weeks. Is pretty cool to see, and I did see that they were even thinking of doing some more. So building upon the success they've had and releasing some more NFTs. So one's based on emus, and then maybe even other Australian animals that are either endangered or at least needing some support. We saw koalas get hit heavily by the bushfires in the start of 2020. So they're really promising to see, and just a really good example of, I suppose, how NFTs can continue to provide a source of income for these foundations all around the world, because you have a lot of NFTs these days will have commissions or fees basically baked into the smart contracts, that anytime they get transacted or exchanged, that you'll see a certain portion of that fees get essentially sent to a treasury, or yeah, some sort of treasury that's been created by the founders of the NFT. In this case, it seems like, I haven't read too deeply into it, but it seems like Drop Bears has some sort of mechanism like that where they have some sort of pool of money that gets collected by the more that these NFTs get traded, and then they have this, initiative to then, donate that money, which is really cool to see, and encourage you to read more about it. I saw their Drop Bears. It's got the verified tick here on OpenSea as well, for anyone who wanted to check it out even more, and links to their Discord there as well, and website. But yeah, definitely in terms of NFTs, the biggest news last week was Coinbase, who announced that they were getting involved in the NFT space by coming soon by essentially announcing their own peer-to-peer marketplace that will include the ability for you to mint an NFT, to buy an NFT, to showcase it, and to just discover NFTs. So that is enormous. We've seen like Coinbase being, such a huge established player in the crypto space. I think been around since 2012, first crypto company in the US to go public. And yeah, already got I think it was 2 million email addresses had signed up to Coinbase NFT in the early access waiting list, within like 72 or 96 hours of this announcement. So 2 million, it might not be 2 million individual people, because people undoubtedly will be putting in multiple email addresses just in case there's some sort of perk or benefit. But still, like 2 million, you could, I would safely say it would be at least like 1 to 1.5 million individual people, to sign up to this within 72 hours was just like really just a sign of how huge, well, A, how huge Coinbase is, and B, how much fervor and excitement there is around just NFTs in general. So, what is it now? We've seen Binance in August announce Binance NFT. FTX US has announced an NFT marketplace. I'm pretty sure OKX is doing something with NFTs. Basically, all the major exchanges are, because they've seen just the demand for it, and they've seen the likes of OpenSea just being so successful, doing billion, like 2 to 3 billion in revenue every single month. OpenSea, so you can see exchanges definitely wanting a piece of the pie there. I think Gemini was one that acquired Nifty Gateway, I think at the end of last year or the start of this year, which will go down as probably one of the best acquisitions in crypto history. And yeah, to see Coinbase coming in, it's just going to be, super exciting, and just more validation for NFTs and more people getting involved in them. I covered last week, TikTok was probably the biggest adoption news I'd seen in a while, getting involved with their NFT marketplace on top of Immutable X, which is a layer 2 solution on top of Ethereum. But yeah, this Coinbase news is rivaling that in terms of just the biggest adoption news in the past, this year really. One that is definitely not adopting NFTs is Steam. So they are, a really popular gaming store in, I guess, the Web 2.0 world, instead of, the Web 3 world that we're moving towards. And that Epic Games, which is a video game publisher and competitor, has kind of, in response to, or maybe not in response, but at least soon after this news, has come out and said they will accept games that are building with blockchain technology and NFTs, so long as they fit their other, they comply with relevant laws, disclose their terms, and are age related. So just kind of interesting here to see two kind of established players in the gaming world come out with, opposing statements on their willingness to accept blockchain games and games that incorporate NFTs. It's not really surprising. Oh, it is surprising to an extent, but you also understand it because these Web 2 kind of centralized companies, their business model is to be that avenue of trust and to be that kind of source that everyone trades through, which kind of the threat of smart contracts and blockchain technology, which is what underlies NFTs. The opportunity with those is that they can, I guess, circumvent the likes of Steam or any other kind of centralized platforms or gatekeepers where you kind of need to trust them in the past. So that's essentially, they're kind of defending against that and just wanting to, I guess, maintain their stake as a leading kind of company, at least for the next few years, which, hey, I'm sure that they will. But I guess the threat of NFT is always going to loom. And in my opinion, will continue to just gain adoption. Alrighty, just moving on to Bitcoin price action, and I'm sure you would have seen it even if you were loosely following the news this week, but Bitcoin did break above 60,000 this week, which was, yeah, very significant news, and was the first time that that had happened since April. So yeah, very significant news. We saw it then, climb another to 61,000, then to 62,000 US dollars. So yeah, we've seen what the last since September 29 from about 41,000. You've really seen basically, yeah, like a 50%, yeah, 50% increase in the past, what's that, 3 to 4 weeks. So it's kind of very, very close now to all-time highs. Um, will it get there? I think it'll get there. As I said in previous weeks, I would expect to like Bitcoin to pass all-time highs by the end of the year. I'd be shocked if it gets to the end of the year and I've looked back and Bitcoin hasn't passed all-time highs. Um, the developments of the past few days has made me even more confident of my stance. Um, I guess if you want an answer out of me whether it's going to happen in the next few days, it's really a flip of the coin, to be honest. I look at this chart and just see how much like Bitcoin has just surged in the past, yeah, few weeks, and you would think like surely it's due to just trade rage bound for at least a week or so, just to you know take a bit of that momentum out of the market. Um, but on the other side of my argument, you've also got like funding rates I saw earlier are basically still negative or around neutral. So you're definitely not really seeing a bunch of leverage just, ape into the market, which like that's when it gets to silly season and you kind of know it's a bit more obvious that a correction is going to come. But funding rates surprisingly have basically stayed around neutral and pretty flat. So that's definitely worth noting. And it's probably a reason why there's still room to go higher. Um, the conservative part of me just doesn't really think it'll come in the next few days, but I'm happy to be proven wrong. But yeah, definitely my conviction has just gotten, yeah, stronger in the last, yeah, on the back of this price action that, yeah, um, we are, like, in my opinion, we're going to see Bitcoin surpass all-time highs, um, yeah, by the end of this year. And yeah, it really could happen this month, right before Bitcoin's white paper birthday on Halloween, October 31st. In terms of the relative strength index, just some momentum, we can see things getting a bit oversold here on the daily time frame. Not incredibly oversold, but still worth noting. And then yeah, Bitcoin just trading healthily above, well, the 20, 50, and 100-day moving average. Um, let's just see how it's going against the 200-day, which is probably more of an important long-term one. Yep, it is also doing very well as well. So all things a very healthy chart. It's just it's more of a when Bitcoin will pass all-time highs, in my opinion, rather than if. So yeah, really, really promising and exciting. So in terms of Ethereum, it's probably again just been a bit in the shadow of Bitcoin in the past 2 weeks or so. Yes, it did increase, but no one really it didn't really wasn't getting really that much attention. And yeah, Bitcoin dominance is definitely kind of, Bitcoin, I guess, has been taken, like, to put it down, like, to for the summary of it, it's basically, yeah, Bitcoin is just leading the way at the moment in terms of just the headlines, and all of the attention is on Bitcoin. So as if Bitcoin was to just surge up to like 70,000 or something, or 80,000, you would then like, I would strongly argue that you would inevitably see a rotation into ETH and the other kind of, you know, layer one chains, or the blue chip kind of crypto assets. That's just kind of what happens, and what's happened like multiple times, like clockwork, over the past, 4 to 5 years since I've kind of been monitoring the markets in crypto. And then you would just see a transition to more risky assets. So if Bitcoin was to rip higher, that's when, I would expect ETH to follow that. But for now, it's just a bit quiet on the ETH front, but still very promising. 3,800 again. It's still gone up. So from 2,800, so yeah, about $1,000 increase in 3 to 4 weeks is hardly, is definitely not negative. Put it that way. Um, cool. Just on some, I guess, major layer one chains, or tokens native to layer one chains that I guess I'm expecting to kind of, you know, outperform the market in the next quarter. I think right now is a really just Polkadot has kind of, it had a really strong leg up, I think, earlier this year. But other than that, it's been pretty quiet, whilst I guess the developments of these parachains has been getting finalized. And last week we finally saw an announcement come with respect to when the first auction of those parachains is going to come, and that'll be on November 11. And I dare say there'll be a ton of like subsidies and incentives, as we've seen with these other blockchains, that'll come out of the Web3 Foundation, which is the entity kind of behind Polkadot, or heavily involved with Polkadot. They have a very, very sizable treasury, and balance sheet, so they will be throwing the kitchen sink undoubtedly at subsidizing, I guess, development, and creating incentives for users to come across and use Polkadot. And on the basis of that, and just the timeline of this, I would expect Polkadot and just the Polkadot ecosystem to really outperform, outperform the market really, for the next few months at least. But it's kind of the extent to which it does that will kind of depend a lot on what Bitcoin and Ethereum does. If Bitcoin and Ethereum kind of like perform extremely strongly, then that will give just essentially more capital and more profits to be deployed into more speculative plays such as Polkadot and the tokens that are tied to that ecosystem. So that's what I'm kind of looking at over the next week. I think also over the next week, you've got some big conferences coming up, such as ETH Lisbon. So Lisbon in Portugal, a big Ethereum kind of conference, and hackathons going on this week. And then Solana also has its Ignition conference. It's coming up in the next few weeks. Um, so, so yeah, really exciting times. I think the massive Ethereum hackathon just finished, and the winners got announced today, I think. So I'm looking forward to getting, and the research team here at Collective Shift getting into seeing, going through those winners lists, and tracking those most promising projects. But yeah, for the moment, I think definitely if you're an investor in the space, I would definitely be thinking about just, you know, having a plan about what happens if Bitcoin goes to 75,000. Just go through these scenarios in your head, and what your exit, well, not exit plan, but what would you do essentially, like, in your investment plan? Are you going to take some profits off the table? Are you going to just let all your profits just sit there? Are you going to potentially be buying more even if Bitcoin does go up to 70,000? All of these decisions have to be made up by yourself, because it all depends on your own financial circumstances, obviously. But I wanted to just stress that at the end of this video. because it's just your decision making will just become so much more, I guess, fluid and unemotional when things are kind of going parabolic. It's also worth doing the counter to that. What if Bitcoin goes down to 45,000 or crashes to 40,000? What are you going to do? Are you going to just hold and just be comfortable with the fact it's probably going to go up again? Or are you going to take some off the table? Or are you even going to buy more? Always encourage you to continue to go over these scenarios in your head. And ideally, you would have these kind of, contingency plans figured out before you actually get involved in the market. But yeah, that's where we'll leave it for today. Just probably one more thing I'm just looking forward to, and I know that I'll be covering more in the coming weeks, will be just the Ethereum layer two solutions rather, that will just kind of be going up another leg and becoming more developed in the coming weeks. So um, you've got Optimism, Arbitrum have both got announcements coming up. Um, I think Optimism is releasing basically like a virtual machine, like a 2.0, which will make it easier for projects to deploy on their layer 2 solution. And then Arbitrum is coming out with their Nitro solution, which again will just make it more performant and easier to use ultimately. And then I think ZK Sync is coming out with something in November, and Immutable X is also um, going to be essentially just removing the guardrails of their solution. Why should you care about any of this? It's more just because if these things all go really well, then it'll just reduce the burden on Ethereum, the base chain of Ethereum, which has been struggling all year with, I guess, just high fees, and it's become very expensive to use for just the average person. So if those layer two solutions can all, you know, successfully deploy and gain strong adoption and users, then that should ease the burden on, really, I guess, drop the transaction fees on Ethereum, um, which will really have like big ramifications for, I guess, the viability of these alternative or these, Ethereum competitors, for lack of a better term. So definitely I'm paying close attention to that over the next few weeks, and I'll be updating you on any major developments in that regard. So, but until then, thank you for tuning in, and I will see you again next week.